Welcome to Cash Flow Hacks Podcast today. I'm your host, Chris, and with me today is a very special guest. I'm super excited to talk to you today about Roth Conversions, and let me tell you why. I'm always telling you, the less you know, the more they make, and we want to help you flip that script. So let me welcome one of my favorite business partners. His name is Jay. And Jay, welcome.
Good morning, Chris.
Us today.
Hey, glad to be here with your audience. This is great.
Efficient Roth conversion. That's what I want to talk about today. And you've been doing this for a while now, and my clients absolutely love this, but you are great at explaining it.
Well, I think the starting place is to kind of clear up a misconception that people are under when they have traditional qualified plans like IRAs, 401ks, 403bs, and a few others. And the misconception is that account is a sole proprietorship, meaning the client owns all the money in the account. And the reality is when you set these accounts up, they are partnerships. And the partners are the various taxing authorities that lay claim to a portion of the assets in the account. So you don't own everything in the account. And unfortunately, kind of the Wall Street mainstream world lets you believe that. They send you a statement or you get a statement online and it's got a big number on it and yours is the only name on the statement. But the reality is that's not true at all. It is a partnership. And when you really step back from it, Chris, and you think about the nature of this partnership, imagine this. Imagine you came to me and wanted me to be your business partner. And I said, okay, Chris, I'll be your business partner. Here's my terms. You, Chris, put up all the money. You take all the investing risk. You pay all the fees and commissions and investing costs on both your part of the partnership as well as mine. And somewhere down the road, when you decide to take money out of the partnership, I'll tell you what my share is and the rest is left for you. Now, that's the nature of the partnership that we enter into when we start an IRA, a 401k, or any plan like that. And it's never been explained that way before. And had it been explained that way, even a second grader opening a lemonade stand would never enter into a business relationship under those terms. So I think that's the starting point, is that people have to understand that this is a partnership. They don't own all the money in the account. And their partner is not only greedy, but they add absolutely no value to the partnership arrangement, to the amount that you're going to end up having in retirement.
Right. So, as I always say, the less we know, the more they make. And like you mentioned, like who wants to be in partnership with somebody that isn't taking any risk at all, or it's not an even partnership? And that is a great place for us to start today.
Right. So I think the one term of the partnership that we have available to us, and we can unilaterally invoke this term of the partnership, and that is that at any time we want, we can dissolve the partnership. And when we dissolve the partnership, we kick the partner out, and then we convert that traditional IRA from a partnership into a sole proprietorship. And as a sole proprietorship, we own all the assets. We control all the assets. We can invest the assets at our discretion. We can take money out when we want. And the beauty is, with no partner, it's going to be tax-free and tax-free forever. And the way that we invoke that dissolution, the way that we kick the partner out, is through the idea of converting that traditional IRA to a Roth IRA. So the beauty here is that we have this one giant lever that we can exercise to convert that partnership into a sole proprietorship and never have to deal with the partner again. The challenge with that, of course, is that to do that, like in the dissolution of any partnership, you've got to divide the assets, and each partner walks away with their share of the partnership assets, and you go your separate ways. And that, from an emotional point of view, is very difficult for people to contemplate, is separating those assets. There's a certain, I may know intellectually that it's a partnership, but when I've actually got to separate those assets and send Uncle Sam's off to him and take my own and go forward, that's a very difficult thing for people to do. So what you and I do with our clients is we show them a way where they can affect that dissolution of the partnership. In other words, they can convert from a traditional IRA to a Roth IRA, and they could do so in a manner where they don't have to give up the assets that they're sending off to their partner. And that's a very, very important point to take away from this whole discussion. And if I could give you a quick example, if somebody has, I'm just going to use a $500,000 traditional IRA. It doesn't matter. You could have 5,000 or you could have 500 million. It doesn't matter. But if you had a $500,000 traditional IRA, what you and I can show the client how to do is to convert that partnership IRA, that traditional IRA, into a sole proprietorship IRA where you own everything. And you end up with the same 500,000 now tax-free that you had taxable before. There's some fancy footwork. There's a proprietary process that we've developed to get people there. But if people understand that a sole proprietorship is a much better arrangement, the traditional partnership element, and they can get there without the pain of dividing the assets and having to take a reduction in their account value, that's a real magic bullet, and that's what we've got the ability to show people how to do.
Exactly. And the thing with yesterday I was speaking with a woman, and I asked her if she had a Roth IRA, and she's like, no. She said they gave me an option to pick a Roth, but I don't even know what that is. Like, I have no idea what that is. And so I want to talk about that too a little bit. Like, the whole reason why anybody would even want to convert to a Roth IRA is because of the growth. All the growth becomes tax-free. And that is not the case in our traditional IRA. And that is also why the government, they only allow us to put in a certain amount into our Roth IRA versus our traditional, because they know, the more we put in our traditional, the more money they're going to get in their partnership, right?
Yeah, we're growing their tax liability on their behalf. So if we invest successfully, yes, we're growing our own money, but we're also growing Uncle Sam's money. And the challenge with that is that we have no idea what the partner shares are going to be, because the only day on which we know what the tax liability is to the dollar is today. If tax laws change tomorrow, we have no idea what that partnership share would be. So they're happy to let us keep building their account. And if the government was to pass a tax law change, particularly for those who are in the middle of retirement on a fixed income, and that tax rate goes up, and they're taking money from a traditional IRA on a fixed income, they necessarily have to take money out of their lifestyle bucket and ship it off to Uncle Sam instead. So yes, the ability to have 100% control is a key motivation, but also the protection of taking yourself out of the tax realm and immunizing you for whatever the government might do with respect to future tax rates is a key element. And there are a number of others, frankly. What
I want to actually go over some of those, but before we move to that, I want to say that when they decide to move their money from one to the other, it's like, yes, we have to pay those taxes that one time. But when you're working with us, we actually show our clients how to create enough money to pay those taxes so that they end up with the same amount. And you may have said that a moment ago, but I just sort of wanted to reiterate on that. Why I love this, what we're doing, is because I call it the backdoor Roth, because we're only allowed to put so much money into a Roth. Like I mentioned before, the government only allows, and plus you can only make a certain amount of money to be able to, you can't make more than a certain amount of money to be able to even put money into a Roth. And so with the law what they created to let us, people that make more money, be able to come in the back door, is absolutely an awesome way to be able to help people that aren't in the lower tax bracket. We're able to help them also get into a Roth.
Right. While there are contribution limits, there are no limits on our ability to convert traditional to Roth. So there's no age restrictions. There's no amount limits. Anybody at any time can take their traditional plan and convert it into a Roth. The only exception to that is if your money is in an employer-sponsored plan and they don't offer that option. But everybody else, regardless of age and amount, can convert their traditional IRA balance, no matter how big it is, or 401k balance. They can convert it into Roth and do that at any time they want.
Right. And most people will never know about this because it's not something that's really advertised out there. I mean, it is a little bit, but I think what we're doing and what we're able to do is just really cool. We've talked about 9 reasons that people should consider Roth conversion, and I wondered if you would like to go over those. We're using an example like of somebody that has $1 million traditional IRA and converting it the conventional way, the way that if you do see it advertised, this is the way that it's happening for people. Show our listeners how we're able to do it in a much more efficient and not as hard hitting, because that's the biggest thing is the taxes. People have to pay those taxes and they're afraid of it. So if we can do that, if you have time, if we can go through some of those 9 reasons, that would be awesome.
Yeah, I'd be happy to. I want to back up to one thing that you said earlier. You said, and I think this is a really important point. It's really important for people to think through this. You mentioned that you don't hear the concept of Roth conversion in the mainstream financial services community. You don't have advisors out there telling their clients you need to convert to Roth as soon as you can. And I think it's important to understand there's a very kind of Machiavellian reason that you don't have most advisors talking about that. And the reason is this. Let's go back to that example that I used with a $500,000 IRA. If you were to convert that to a Roth, and let's just say the tax rate, to make the discussion, the math easy, was 30%. You've got a $150,000 tax liability. Now, if you convert it, your after-tax account, again, this is doing it conventionally, not the way you and I would do it, but if you did it conventionally, the owner ends up with a $350,000 account, not a $500,000 account. The reason the mainstream financial services community doesn't talk about Roth conversion is because if they collect a percentage of the account balance for their fees and commissions annually on a $350,000 account versus a $500,000 account, they've taken a tax cut. And funny enough, the mainstream...
They've taken a pay cut.
A pay cut, yeah, sorry, not a tax cut. I've got taxes on my mind. They've taken a pay cut. And funny enough, the mainstream financial services community doesn't like taking a pay cut. So they're almost never, they have a financial incentive to not tell you about the benefits of Roth conversion. So I just think that's an important point. If we move over to you mentioned the 9 things. We won't go through all of them, but I think there are at least 9 really important reasons that a lot of people would want to consider Roth conversion. A couple of them we've already talked about, and that is you immunize that money from future tax rate increases, no matter how goofy the government gets with tax rates. You also take yourself out of the requirement to take distributions out of your IRA starting in your mid-70s. A lot of people don't need to take money out. They're forced to through what's called required minimum distributions, really for the sole purpose of paying the tax on it. That's kind of the government's way of getting their piece. A Roth conversion, the after-tax value is the same as the pre-tax value in terms of what goods and services it'll buy. That's another reason. I think really importantly, some people, depending on the rest of their financial situation, may be able to, through Roth conversion, immunize their Social Security benefits from taxation, which is a really big deal. And in the same vein, they can reduce their means-tested Medicare premiums once they're in retirement. They're going to eliminate the necessity of their heirs, when they pass on what's left in the account, having to pay the tax liability within 10 years. So there's a thing called the widow's penalty. So if one spouse passes away, the other spouse inherits that IRA, and they're going to pay taxes at a higher rate because they're filing single instead of married filing jointly. Again, we could get deep into the weeds here, and that's not really my intention. But there are a number of good reasons to consider Roth conversion besides the obvious ones of being immune from future tax rate increases.
Well, and the other thing is I've done a podcast on actually a self-directed Roth and being able to use a checkbook and be able to, there's so many more ways that we can use this. But if you haven't heard the podcast on checkbook IRAs, you need to listen to our podcast on that, because this actually even amplifies this.
And again, Chris, not to jump in here, but that's another thing you're not going to hear from the mainstream financial community because it's self-directed, and meaning you don't necessarily need them. And so they're not going to advise you of things like that. But you're absolutely right. A checkbook IRA is a fantastic vehicle that gives you a tremendous amount of flexibility to do things in your IRA that you couldn't do through a traditional brokerage outlet or traditional custodian.
Right. And now, I mean, honestly, they probably already know this because I say it all the time. The less you know, the more they make. Who are we talking about here? We're talking about conventional, traditional financial advisors and also the government. The government doesn't want you to know this because if you don't know it, the more money you're going to be paying to your partner. Now, our goal is to actually help you get out of this partnership and start growing your money tax-free. So,
Chris, you couldn't have picked a topic that's more consistent with that theme. The less you know, the more they make. This is one of those topics that absolutely is the poster child for your slogan there, no question.
Yes, and this year I'm writing a new book, and I'm going to have this. This is actually I'm going to talk about this in the book because I mean this is something that people absolutely have to know about. 2 reasons I know we talk about it a lot is that people say not to convert to Roths. You talked about it. It's because of the people don't want to take a pay cut, right? But also they're talking about shifting into a higher tax bracket. They're afraid to do it because of that tax bracket, but we're actually fixing that situation, right?
Yeah, I mean, if the taxes are going to be paid from money that doesn't reduce the value of your account, who cares what the tax bracket is? But you're right. When people think about conversion in a conventional sense, they would have to add that $500,000, going back to our example, to their income that year, and it might push them into a higher tax bracket, and that can dissuade people from looking at conversion seriously. But if it pushes you into a higher tax bracket, but the money's for the tax is going to come from another source, who cares? Get it over with, rip the Band-Aid off, and start enjoying your tax-free life starting tomorrow.
Yes, absolutely. So Jay, I appreciate you coming on here. I know you and I talk about this all the time, and I was just like, we have to, we need to have this conversation in front of our listeners so they hear some of the stuff that we have going on. If any of you are listening and this sounds like something that you would be interested in and seeing how this could work for you, how this could even look, there will be a link in the show notes so you can make an appointment and we can show you how this can look for you. There's no obligation. It's just, let's just have a conversation and see if we can show you how this would make sense for you. So again, thanks, Jay, for joining me. And thank you, everybody, all of our listeners. Find us on Facebook, find us on LinkedIn, find us all over the place. We're trying to be everywhere so we can help as many people as we can. Give us a like, share with your friends. Sharing is caring.